Hey guys, good afternoon, everybody. It is 2:02 right now, Monday, April 4th. I'm gonna go and set up this room real quick, and then we can get started for our group mentoring session for this week. So get this all set up right here. Looks like we're good. Get the rest of this going right here. Solid. A couple other things to wrap up right here. All right, looks good. Get this link sent out. You guys here in the premium. All right, looks good. Give it a few minutes for people to make their way in. Hey guys, good afternoon, everybody. Today is Monday, April 4th. It's 2:04 right now. Our group mentoring session was scheduled for 2 o'clock, so it's just a few minutes after 2. I'll give it a few minutes for people to make their way in. Once everyone's in the room, we can get started with our mentoring session for this week. So if you guys have any questions, feel free to put your questions in the chat. We'll answer the questions in chronological order. I'm going to start off by going over bias, right? So I'm going to go over that first, and then once we go over that, then we can go into other questions. So hey Matt, hey Marlon, hey iPhone, everybody. I'll get a few minutes for people to make their way in, and then I'll start going over an explanation of like how bias is determined using technicals. So I think that's like the main topic for a lot of people who are still trying to understand. I'm going to explain it somewhat in detail today. I'm also going to start with the videos for the new strategies and just a lot of other explanations as to like what we've been applying lately, since I know a lot of the stuff that we do on the live is not in the lessons because it's all freshly kind of new. I just want to make sure everyone's like getting everything down. But anyways, let's see if there's anything else here for me to look at. All right, I'll get a few more minutes. There's about 18 people in here, so I'll let a few more people join in, and then we will go over that explanation of bias shortly. All right, so I'll just start off with one example here. Here is one example. Let's see, Gerald's asking, is this where you put our questions at? Yeah, you can put your questions there, Gerald. Once I go over this first explanation as to like how to identify bias on the technical side, we'll go over with the next questions that come up. So you can go ahead and type up your questions there, and then I will get to your question as soon as we're done with our explanation here with regard to bias. So, all right, let me go over here real quick and I'll show you. This is a pretty clear example, looks like, right over here. Okay, so let me put the requirements over here. I think I do have them. Okay, so basically when you're identifying bias on the technical side. The other identification of bias would be retail sentiment. So the first thing we look for here is retail sentiment. We generally want this to be about 60 to 65% in one direction or the other. So for example, here it's 54% short, so it's not very strong. However, it's telling us that there's 54% of retail traders on the short side. It's not a strong bias, but in order for it to be strong, you typically want it to be above 60 or 65%. 70 to 75% even better, but 60 can, it'll cut it for what we need it for. So for example, right here, if this was 60% short or 65% short, then we would be looking for buys because we want to do the opposite of the majority. With that said, this is going to be step one for retail sentiment. Step two is going to be fundamentals. Markets closed right now, but typically if you want to be looking for entries off of a fundamental bias, we generally want this to be 100 points in the green consistently or 100 points in the red consistently. So with this right here, it's slightly below 100 points, so there wouldn't be a strong bias. It has to be like 100 points and above, so like 100 points, 150 points, 200 points, etc. Either green or red. If it's green, then we're looking for a buy. If it's red, we're looking for a sell. You're going to tie those two biases together. The one that most people have confusion with is the technical bias over here. So in a situation like this where we don't have a strong bias with regard to retail sentiment because it's so small, it's like right down the middle, and it's same with fundamentals where it's so small as well, and it doesn't fit the requirements, we would be using the technical bias here to confirm the direction. So in order to confirm the direction, you guys can see right here that price was basically, it was basically trending up for quite some time, right? So you guys can see here in a trend to the upside. What you want to confirm is that price is now ranging. So price was trending for a while right here, but you can see from this point right here, it started to range right down these two sessions, right? So in order to identify a switch in bias, because price is obviously in a bullish bias right here, in order to identify a shift in bias, you would confirm this. First, confirm a price breaking close past structure. The structure is going to be this New York high right here, or sorry, London high, which is this red line. These sessions are going to be different session highs and lows. So as you can see right here, this green line above here is the New York high. This purple line right here is going to be the Asia high. This red line right here is going to be the London high. This is the Asia low, and this is the London low. These are considered structure. So by using this right here, you can identify where price is going to be switching in direction, right? Because if you look over here, you can see that this is an area of consolidation, right? So if I was to turn everything off here, you can see that price is actually ranging, right? If you have a lot of stuff on the charts, it'll be hard for you to see, but you guys can see right here that it's clearly ranging. So when it's ranging like this, you're looking for some sort of confirmation of bias change, right? Because price was in a bullish bias right here, and then it went into consolidation. What happens after consolidation? Price chooses a new direction. It's either going to reverse to the downside or it's going to push up higher. So with this said, we're looking for a possible shift in bias. So in order to determine that, you're going to confirm a few things. So let me just go ahead and clean this up right here. I'm going to turn these sessions back on. And you want to use the sessions. Like you can use the high lows. Like this was a question that we got earlier from Todi in the group. But as I mentioned, these sessions are going to be stronger structure. You can use the high lows if you like, but the sessions are going to be really what are the game changer in identifying where the bias is changing. So with that said, looking over here to the first requirement, you want to confirm price is breaking and closing past structure. So you can see this candle right here is breaking and closing past this structure here, right? Which is the London high. With that said, you want to confirm that price retest structure. So what I'm going to do next is I'm going to move forward. We have step one right here. Price is broken and closed past structure. So this is going to be step one. The next step is going to be confirming retest of structures. You want price to come back and retest this structure right here, right? Step two is going to be right there. So you can see with these following candles, we have a retest of the structure, right? Price broke and closed it, it retested. The last step, you're looking for price to break and close past the recent high low. So as you can see at this point, there's two high lows right here. There's one right here, and there's one right here. If it breaks one, it's probably going to break the other, right? So confirming this right here, we have step 1 and 2. The third step is to confirm price break and close past this high low. So what we're looking for is for price to break and close past this line right here, right? So next step right here, there goes the next candle. It didn't break and close past it. And there we go. Price right here broke and closed past it. And you can see that price is now shifted. So price went from a bullish bias to consolidation to now reversal, right? And if you move this forward, you can see where price ends up going, right? Played out perfectly. So this is how you identify a change in bias, because bias was bullish, went into a range, and now it's bearish. So hopefully that makes sense to you guys. Once you have something like this, you can start taking trades in that direction. So like, for example, let me see if I can find something over here. If there was any entries, maybe not. Like this could have possibly been an entry right here. This red signal. It's not a strong entry, but if you're applying like the pivot scalp strategy, let's see. I mean, this technically could have been, an entry. This is on the 3 minute. I think we have one for the 1 minute as well. Yeah. So if you're trading on the 1 minute, confirm valid K2 momentum signal, confirm that it's below. It's not like clearly below, but let me go back if I could rewind it, if it was there. So if you go back to that candle right there, technically it wasn't like directly under it, but if it was, just using this as an example, you could have possibly taken this for, some sort of sell. And I'm just using this as an example. It's not an actual entry. I'm just showing you that, once you have the confirmation of a shift in bias, you can take a trade in that direction and then let it run to TP. So let me see if I can find another example here to show you guys what I mean by that shift in bias. All right, so there's nothing over here. Let's see if I could find one on this end. Nothing there. It's probably gonna be hard to find on this day because it was Sunday. Yeah, yesterday was Sunday, so there wasn't really much volatility in the market. Let me see if I could find one. Another example here. I mean, there's got to be an example somewhere. You just got to find structure. I guess this can be used right here. It's not a very good example, but I mean, it'll work just to show you guys again, what we were just discussing. Again, this was on Sunday, so you're not going to see much volatility, but I'll just show you again, like how this is applied. So it's a little messy here, but you can kind of see what I mean by this. So again, right here, price swung above, swung below. If you just draw the highs and the lows, you guys can see here that price was in a range, right? So from this point right here, you can see that price was, I mean, it was in a big range. So like, for example, it was like ranging from here basically. And then if you drew like more high lows, you can identify that the range was actually getting tighter. So with this right here, you can see that this is like the full range. And then this is the smaller range. It was a big range, it got tighter, it got even more tighter right here. So at this point, price is literally just, going sideways right there. So at this point would be a good time to identify a shift in bias, right? Because you can see, for example, here, price was bullish, went into a long range. At this point, price will do one of two things. It'll either continue up higher or it'll drop below and reverse, right? So with that said, I'm gonna clean this up a little bit. It's going to turn these off because these are pretty much relevant. I'll just take everything off so that you guys can just focus on this session right here, which is the Asia low. So anyways, looking at this right here, you can see price was below the sessions. It's kind of hard to see because the candles are small. Again, this was on Sunday, so the volatility was a bit low. But you guys can see right here that price was technically below, and then it broke above right here, the structure. So right here, confirm price break and close past structure. That's going to be step one right here. Step two is you're looking for a retest of the structure, right? So move it forward a little bit, pushed up a bit, and then, or sorry, actually, I totally missed it right here. So actually, this is not really a good example. Let me go back to a day where it's like actually moving, because I thought this was going to come back and retest. There was technically a retest right here, but this just isn't a good example because you can see these candles are too small. It's not a clear like break and retest of the structure. Let me just go to another day, not Sunday, like Sunday last week when the market was actually moving. Okay, so this was like Friday. This might be a better example over here. Yeah, this was on Friday. So sorry, let me just delete this little scammer over here. Is this the same Stanley? It's a different Stanley. Okay, let me just delete this scammer from the group. All right, so back to what we were just discussing. Let me put the requirements right here. Again, we're looking for price to break and close past structure, right? So we have price breaking, closing past structure. And let me just show you again where you're looking for this. You're basically looking for a shift in bias when price begins to range. So going over here, I'm gonna just draw a high and then draw a low right there. And another one right there. So basically you can see here that before I drew that line, price is literally ranging, right? So price was dropping right here. Oops, take this off. Price was dropping right here in a downtrend, and then it went to a huge range at this moment, right? So when price starts to range like this, price needs to break out to the upside or to the downside, right? It's gonna have to go one way or the other. So in order to determine which direction bias is going, you wanna identify the shift in bias, whether it continues or that it reverses. So again, right here, confirm price breaking close past structure, which is this Asia low right here, this purple line. You can see this candle here is breaking and closing past it, right? After that, you're going to look for a retest of the structure. So we have step one right here. The next step is for price to come back and retest the structure. So let me move forward a little bit. No retest there yet. And this is why I tell people not to chase the sell, because it hasn't retested yet. You're looking for that confirmation. Price is still within the range, but we're looking for an actual retest. So right here, price is still ranging sideways. It comes up and there goes a retest. So there's step two. Confirm retest of structure. The next thing you're looking for is for price to break and close past the most recent low, right? Because you're looking for that confirmation of a bearish bias. So with that said, we have the retest here and we just need price to break and close below this point right here. So here we go, as price continues to bounce around this area. And there we go, at the break and close. So with that said, we've confirmed a break in, like we've confirmed that the bias has continued. It was in a bearish bias, consolidated range, and then now it broke and closed below. So we can anticipate price to drop, even lower. So if we let this run, you can see here that price does drop pretty heavily. So once you get something like this, you can start looking for entries and stuff, right? So like one thing that you would probably be looking for would be any type of entry that would appear. So using this for an example, we have a, sorry, let me fix that. We have a low right here. We have a low right here, right? Or I'll just delete this. So we have a low right here, right? What's the type of entry that you'll be looking for at this point? If you have a low right here, it's already established the low. There's been 5 candles. The strategy that you're probably gonna be looking to apply is going to be a high-low scalp, right? So here's a high-low scalp. Basically what you're looking for is first you wanna confirm the previous swing high or swing low, make sure that 5 candles have passed. There's a low right here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. So with that said, there's a low that's been established. Next, you're looking for price to break and close past the previous swing, which is right here. You can see right here that this candle here does break and close past it. So with that said, you can take an entry there. Third requirement is confirm you're trading in the direction of momentum. Right here, we have a sell signal, so we're already trading in the direction of momentum. We want to make sure that price is not ranging or consolidating. Price was ranging, but it broke below, so we have a confirmation of a bearish bias. Lastly, you just want to confirm that price has not touched the previous swing before the break and close. There's no candles here previously that touched it, right? So with that said, you enter a short position right there. You set it to 100 pips. You let that run and full TP right there on the next candle. So that's an example of identifying what the bias is and then entering a trade after you've confirmed the bias, because it's basically going to tell you, that price is going to keep dropping. So that's exactly how you would identify bias. So hopefully that makes sense for you guys. If you still need help with identifying the bias, feel free to let me know. I can find more examples for you. But it's pretty straightforward. I mean, this thing is not too difficult to apply or understand. It's really just practice. Like, it might seem a bit difficult at first, but as you continue to practice and execute these trades, it's going to make more sense to you, right? It all comes with experience. So the more you practice, the more you execute, the more that you hit your profits, the more comfortable you'll be with identifying how to use these theories, these strategies, and whatnot. So other than that, we will go over to the next question. So, all right, let's see. First question is from Gerald. Gerald's asking, can you show how to find liquidity? So Gerald, I know you don't have the indicators, but you do need the indicators to identify what the liquidity is. So it's really simple. Let me go over here real quick. And so today wasn't really a good day to identify. Well, I mean, I can show you where liquidity is at, but it wasn't really a great day to identify liquidity zones because price didn't really push very much in either direction. So anyways, let me just go back to where we were during the live this morning. It's going to turn off the indicators that are not being used. So the main thing that you want to look for, or the main thing that you want to turn on, is a high-low indicator. So first things first, here's a clean chart. You want to turn on the high-low indicator. And to identify the liquidity areas, you want to go ahead and draw lines. I use horizontal lines. Or horizontal rays to identify where liquidity is sitting. So if price is right here, you're going to go ahead and draw liquidity where the lows and highs are, but only the lows and highs that have not been tested, because once they're tested, they're no longer valid because liquidity's already been hit from that area, right? So with that said, we have liquidity drawn here. Everything else here has been tested, so there's not really much liquidity here. Price was pretty choppy all throughout pre-market. So as you can see, there is liquidity sitting on the bottom. There's like one level of liquidity on top. So what you can see here is when price comes down, it's going to hit liquidity. It's going to drop even further. So right there, look where price dropped from, right? Off that next candle. So we drew these liquidity zones prior to market open. Market open right here at 6:30. You can see where price comes down and where it bounces from. So price comes down and it hits liquidity right here. It ends up pushing further to this point right here. And you can see exactly where price rejected from, right? It hit liquidity again right there. And then look where price bounces from. It's no surprise because we already drew liquidity there. Like I drew it before it even happened. Price came down further. And where did the rejection come from? The last area of liquidity, right? So, I mean, you guys can see there that it's pretty clear and how accurate these liquidity areas are, because it literally went straight to that point. Other than that, let's see if there's anything else here that I can show you. Let me show you another example. I'll go back to like a random time just so I can show you, liquidity can be placed anywhere. It doesn't have to be placed at any specific time. Like I can literally go to like right here. And this is Asia session. So market's actually kind of slow around this period, but I mean, it doesn't make any difference. It doesn't matter if you're trading whatever session, liquidity still sits, right? Doesn't matter if you're drawing it up during Asia session, London session, New York session. Liquidity is liquidity. It doesn't make any difference. So let me draw these over right here. All right, so I think that's it for liquidity right there. Everything else has been tested, so it's no longer valid. But anyways, here's liquidity areas. You know, what you can anticipate is if price pushes past liquidity. Right here, price is ranging. So at this point, you kind of want to look for confirmations of bias, like I was saying earlier, because there's no direction, right? So price is going sideways. One of two things will happen at this point. Price will either break to the upside or it'll break to the downside, right? So here's the session right here, the Asia low. Basically what you're looking for at this point is you're looking for price to possibly hit liquidity to get some push up right there, possibly a retest of the structure and confirmation so that you can ride it up higher, right? So if we move this forward, you can see right there, price broke this area. It did kind of what I anticipated, right? Hit liquidity, and then it pushed up higher. Here it comes back down for the retest. Basically looking for the confirmation right here, price to break and close past this point. Because once it does, it'll probably push up higher. Right there. So this ties in with what I just discussed, right? So I was talking about bias. You tie in liquidity with bias. So price broke and close above it. It's confirmed the bullish bias. So at this point, what do you think is going to happen? Price is probably going to push up further and hit all of these areas of liquidity right here, right? You move forward. And there you go. There's no surprise. Look where price is rejecting from, right? Price pushed up exactly how we anticipated. And you can see where all the wicks are rejecting off. Liquidity. So this is how you guys can use these. Like this is basically just normal analysis. I mean, if you could find entries within it, then you can enter entries, or you can, I mean, you can just go off the analysis and kind of write it up because it's not that difficult. I mean, if you guys are able to tie all these different theories together, liquidity, confirming bias, you know, using any of the strategies. See if there's any entries here. I mean, there's a couple entries you could have taken. Like right here would have been a high-low entry. You could have taken that. I mean, there's different things you can apply. Like we have a ton of different strategies you can apply. There's a ton of different things that you can use if you want to take something that's speculative. It's just really up to whatever you guys feel comfortable with. Another question over here from Gerald. Gerald is asking, can you provide an example of your speculative trade and the logic behind it? So, I mean, you have to give me like a specific trade, Gerald, because there's a ton of different things that can apply as a speculative trade. Just like I said here, you could have taken a speculative trade here for a high low, right? Like it's not exactly a perfect entry, but you could have taken it here because maybe like not all the requirements are met, but you could have taken some sort of trade at that point. I mean, you have to be like very specific when you talk about speculative, because speculative could mean anything. Like I just felt like taking a buy, right? That's speculative. Or I saw price was going up, so that's speculative. There's no real reasoning behind a speculative trade. That's why it's called speculative, because there's no reason. You're kind of just taking a trade because you're thinking that price is going to go up. So the realistic reasoning behind speculative is that you have to know what you're doing, right? Like I know what I'm doing. I know price is going to go up because there's areas of liquidity. So the reason why I would have taken, or if I did take a speculative trade here, is because I already anticipated price to go up. Like I drew this before it even happened, right? So price was over here. I already confirmed that, you know, we had liquidity sitting there, and we also were confirming the bias. So with the confirmation of bias right here, it doesn't matter if there was a strategy or no strategy there. I already know price is going to go up. So if I knew price was going to go up, then that's a speculative trade. So I think you're confusing speculative with like a strategy. There's no strategy with speculation. That's what speculation is. It's kind of just going off your gut if you think price is going to go up. So like, for example, here, if I saw it going up, then, you know, I would have just taken the trade and wrote it up to this next level of liquidity. So yeah, try not to get that confused, guys, because I'm not sure if you're confused, Gerald, about, you know, what speculation is or what it means, but it's like there's no reasoning behind it. Like I can't give you a strategy for speculation. It's kind of, you have to know what you're looking for. You like, if you know price is going up, then you're going to take speculative buy. If you think price is going down, you're going to take a speculative sell. So Hopefully that makes sense. I mean, it probably doesn't make sense because there's no real structure as to what a speculative trade is, but it's basically just taking a trade in the direction that you know it's going. Other than that, let me scroll up real quick. The next question is from, let's see, iPhone said, hey, Sean, I have to get ready for work, but next time I'll make sure I put it in Monday as my paid day off. Yeah, no, definitely, guys. Also, for next Monday, I'm gonna try to hold a mentoring session like a little bit right after the live session. We have one of our members there, I think Tito, I think he's here right now. But Todi or Tito, he he's located in Europe, so like his time zone is opposite of ours. So he's asking if we can do it earlier. So I'm gonna put a poll up if you guys are okay with that. We're probably gonna have the mentoring session right after the live, so that he can sit in and have his questions answered as well. So next question is from Gerald. Gerald is asking, what strategy do you find yourself using the most on a day-to-day basis? I use whatever strategy comes up, Gerald. That's a question that a lot of people always ask me. You're not me. So whatever I do well, you might not be as good at. So what you should find out is what you're good at and master that. I feel like a lot of people try to copy everybody. Like everyone tries to be the same exact trader as another person. But the thing is, it doesn't fit their trading style, right? Like some people are not good at scalping. Some people are not good at swing trading. You got to figure out what works for you. Because the thing is, if you've been trying to trade like me for like months or years now and it still doesn't click with you, then it's probably not your style of trading. So, I mean, if you look at every live drill, I'm applying the same strategies. I'm applying all the variations. I'm applying the high lows. Pretty much if you watch any live session, you can see what I apply and it works because that's the only time that I trade. I don't trade after that or before it. So if you're asking me what I apply, you should already know it's going to be the variations or high lows. And I think that's about it. The triple confluence, that's pretty much it. Like all the 1 minute strategies, because I only trade on the 1 minute. So all of these are what I apply. If it works for you, great. If it doesn't, you got to figure out what works for you, right? You can't force yourself to be good at something that you're not good at. I mean, you could, but it's probably not going to flow well and it's not going to be consistent. So what I would recommend is, figure out what works for you or try to apply whatever I'm applying here on the live. And then if it doesn't work for you, then you have to either use a different time frame, because I trade on the 1 minute. Some people don't like the 1 minute because it's too fast and they're not able to follow along. So maybe you want to try stuff on the 3 minute, maybe you want to try stuff on the 5 minute. If that's still too fast for you, go on the 10 minute. But yeah, you can't really mold yourself to be exactly how I am, because, I know what I'm good at and that's what I stick to. So yeah, hopefully that helps with that right there. Let's see, next question over here is from, let's see. Let's see, next question is from Marlon. Marlon's asking, Sean, once someone passes the Ftmo challenge and has a funded account, is there a max loss on the real account? Yes, there is. So you still have to follow those requirements, Marlon. So even though you get funded, you still have the 5% max daily loss and 10% max total loss. So even once you get funded, you still have to follow your same criteria. It's just you're not really pressured to take as many trades, because once you're funded, you don't have a profit goal. So like, say for example, like when you're doing the challenge, you have to make 10,000 in a month, right? Or 10%. That's kind of stressful because you kind of feel forced to take trades, every single day. Once you're funded, you don't have to take as many trades because you could make profit, or you'll get a payout even if you make just one profit for the entire month. That's why for me, when you see me on the live, I don't really take every single trade. I do see trades that come up, but I'm not inclined to take them, right? Because I don't want to lose any trades. That's why for me, I'll make like a couple wins a week and I'm fine, because I'm still going to get a cut out of that profit. Versus people that are who are doing the challenge or the verification, you guys feel pressured to make X amount of profit right away because you want to make sure that you pass the challenge. So once you get funded, you should still trade the same way you did once you got funded. However, you shouldn't feel the need to force trades, because I feel like that's a problem with a lot of people. They feel kind of pressured and they end up taking too many risky trades during the challenge and they fail. Realistically, if you just take a couple trades a week, I mean, you can still pass the challenge either way. It's all mindset. That's why for me, I'm just relaxed during the live session. We're all having fun during the live because I'm not pressured to make like, 10K in a month, even though it's possible. It's not really required for me. I just stick to what keeps me sane and calm and composed during the live sessions, because the better you get at controlling your emotions, the better you'll be long-term trading. Let's see. Next question is from Randy. Randy's asking, quick question. My session high-low indicator aren't labeled. Do you manually label them, or it's supposed to be built into the indicator? So here's what you can do, Randy. For the sessions high-low, if you don't have it set up right here, right-click on your chart, go to settings, go right here to scales. Once you go to that, make sure that this is clicked right here where it says indicator and financial name labels. You probably have it off. So if you have it off, it looks like this. If you don't have anything there, you probably have this closed off too. So if you want the numbers, click on that. If you want the names, click on that, and it should pull up right there. Click OK, you should be good to go. All right, other than that, let's see what's next. Rashida's asking, how can you connect Ftmo to the DOM? So Rashida, I know you had an issue with getting MT4 on your chart. In order to get it, just make sure you're logged into your Ftmo. I would drag it over here, but every time I drag it, it screws up my MT4, so I'm not going to do that. I'm just going to tell you direction. So just click on your MT4 chart, then right click on it, then go to depth of market. That's what DOM stands for. And once you click on that, a box will come up. Once you have that box up, above the cell, there's a box where you can change the numbers. That's going to be your stop loss. On the right side, that's going to be your TP. So for example, if you want to set a stop loss of 300 pips, you're going to put 3,000 in there. That's equal to 300.0, because there's no point that you can put in there. You just have to put an extra zero. The middle is going to be your lot size. So if you're doing a breakout, you'll put like 5,000 under the first box, 5,000 on the last box, and then in the middle is going to be your lot size. That's how you'd set up the DOM on Ftmo, on MT4. All right, other than that, let's see. Melanie's asking, do you always aim for 10 points at open? So not always. I mean, it depends if I'm taking the full move, Melanie. So like, for example, today was kind of risky because it was Monday. So if I go back to the breakout over here, all right, so 6:30 was right here. This is when market open, right? So like, for example, on open, we're looking for the breakout, right? It just really depends on like what I feel about this trade. Like, for example, I thought this trade was risky because it was right at the sessions. So I didn't really feel comfortable about it. If I'm going for the full move, so I'm looking for the breakout right here. Okay, so this was a breakout right here, right? Because you're looking for confirm the bias. There was no retail sentiment and there was no fundamentals. These were out of the question. So with that said, I wasn't really feeling this trade here for the breakout. However, if it did line up, then okay, yeah, I would take it. But this morning I didn't feel comfortable. So for this right here, I know that this was a breakout and it did actually work perfectly fine. Like if I saw this right here and say that I felt like I still wanted to take it, but I didn't want to go for the full move, right? Then if that was the case, I would just go for the quick 100 pips, just like you were saying, right? That's speculative. It's just a speculative move right there. So if I wanted to take the trade there, I would just take it for 100 pips, hit my TP, and I'm out. I'm happy with my 100 pips for the day or for that trade. However, if I'm going for the full move, then I'm going to set it to, 500, 500, and then I'm going to let it run. Or, obviously it did hit full TP. So it just depends on it's like case by case, depending on the market conditions, if they line up perfectly. Like, for example, if retail sentiment right here, if this said it was like 60% long, and then this right here, the fundamentals were like, it was down like 120 points, then yeah, for sure, I would take this for the full move. But it didn't have that this morning. It was like right down the middle. It was like at 50% for sentiment. And then it was like at zero, it was like a flat line for the fundamentals. So for that right there, I would just take like a small move if I wanted to take it, but I didn't feel comfortable with this move at all. So I didn't take it at all. I just didn't take any trades today. So hopefully that makes sense. Scrolling down to the next question here. Gerald said, thanks for the explanation on speculation. That gave me great understanding. And yes, that made sense. Yeah, no, definitely, Gerald. Speculation is really confusing. That's why I don't really tell people Like when I take a speculative trade, I usually don't tell you I'm taking it because I don't want you guys to think that there's a specific strategy I'm following. I'm kind of just taking it by gut. Like I'm like, okay, I think price is going to go up, so I'll just take it for a quick move. And same with the sell if price is pushing that direction. Gerald's asking, can you go over the breakout trade when market actually opened? So I just went over it right there, Gerald. Let me see if I can find another one for you. But I don't know if you missed it. I did go over the breakout that happened this morning, which is right there. Let me see if there was one on Friday. I don't think Friday was a good one because it was NFP. But let me see if there's any other breakout here. It's kind of hard to go over the breakout because you need to look at the fundamentals and retail sentiment, and that's not something that we can look at later on because it's it's so far out in the day. So what do we have here? I think this was okay, so let me show, there was a breakout right here on Friday. It was the same situation again right here. I didn't feel comfortable with the move here because it was right at the sessions. Also, it was NFP. So I didn't take the breakout here, but I'll show you what the breakout was and what it looked like. So here's a breakout again right here. You want to confirm the direction of bias. Again, we can't go back and look at what retail sentiment was or fundamentals at the time, but we'll just assume that it was bearish, right? We'll assume that retail sentiment was this was like 65% short and then or 65% long. So we're looking for sells. We want to do the opposite. And then say that the fundamentals here were like down 120 points. I know it doesn't show that now. We're just going to use that as an example so that I can show you if everything lined up here. So if everything lined up, bias was for a sell, technicals were looking like a sell. We confirm the direction momentum right here. We have a sell signal. So direction of momentum is downwards. And then you just want to look for a strong candle in the direction of momentum. So like, for example, right here, price is pushing down, market opened right here at 630. This wasn't the breakout because it was too big of a wick right here. This wasn't a strong red candle, so this wouldn't have been the entry as well. This right here could qualify as a strong red candle because you can see that the wick here on the bottom is not huge. It's kind of small, and the body here is a lot bigger. So with that said, you could take this here for breakout. TP stop loss, 500 pips, and this would be the breakout entry. We let it run. There you can see price got really close to TP, kept going, and then full TP right there. So that's an example of breakout. If you need another example, Gerald, just let me know. I can look for another one, but I think it's pretty self-explanatory. You're just basically looking for a strong candle in the direction of momentum. But yeah, so that's it with that one right there. So next question over here. Oh, no problem. I only had to saw your question there. Gerald's asking, can you go over a triple confluence? Sure. And I'll see if we could find one. Those triple confluences don't come up too often, but when they do come up, they're usually a hit. So let me see if I could find one. Let's see anything here. No, this one is close. Not close enough. Yeah, this was close right here too. Thought this one would have been one, but the trend meter here was not green. Yeah, these triple confluence, they don't come up too often, but when they do come up, they almost always hit. So if I do see them, I usually take them even if we don't have a very strong bias, because it's just like 100 pips, so it goes by pretty quickly. Let's see if I got one. Nothing there. A lot of these get really close, but they don't get to where it needs to be to actually confirm. I think I saw one earlier today though. No. Nothing there. Probably not going to find one right now because this is like Sunday or pre-market, so volatility is really low. See, I'm gonna go back further. I might just have to go back to like a random day when volatility is high. See if we could actually find one. Yeah, this was like really close. No, it didn't close below it. Yeah, you can see that it happens where they come really close to it, but it's very rarely where they actually fit all the requirements, because it's technically 3 strategies in one that line up on the same, candle. So it's not one that you come across too often. It's actually easier to see like when price is ranging. So let me see if I can find where. Here, I'm gonna go to random day. I'm gonna go farther back because Sunday's not gonna have it for sure. I already know that because there's no volatility during that time. Let's go on Friday. So this is last Friday. No, it's close. Not quite. Close. Okay, perfect. We have one right here. This doesn't happen too often. Let me see. Or actually, no, it's not going to fit. 1, 2, 3, 4. It doesn't fit the high-low requirement. One, two, no. There's a lot here that get really close. They're like mostly just like a double confluence because it does fit requirements, but it doesn't fit all of them. We have to go back like a week or so because I don't think we remember seeing them at all like this past trading week. I know there was like one that happened, I think last week or the week before that. But it happened so fast that we like totally missed it. Actually, there's one right here, but I think this was like pre-market, so it wouldn't even count because we wouldn't be taking trades like that. And it's too big of a move. I mean, technically here, like if you took a trade here, it would take some time to hit, but I'm trying to find one that's actually clear where you can see where it's not like some random spike in price. This was NFP too, so it wouldn't be good to take trades during that time period. There's a lot of news that morning. Let's see. There's got to be one here. I mean, it happens every so often, but there's got to be at least one. Okay, there's one right here. Actually, it's perfect. This is actually perfect entry. So you can see how far I had to go back. I had to go back to like March 31st because this trade doesn't come up too often. Okay, so let me go over here real quick. And let me put the requirements for the triple confluence. So basically what you're looking for is you're looking for a valid K2 momentum signal, right? Right here, we have a valid sell signal. So with this set right here, this is going to be a first requirement. You're looking for a valid K2 momentum signal. Second, you want to confirm that the signal matches the trend meter. So this is a red sell signal, trend meter is red. That's requirement 1 and 2. Requirement number 3, you want to confirm that price is above the K2 pivots for a buy or below for a sell. The pivots are right here, so price is below that, falls for the requirement. The 4th requirement is that you want to confirm price is breaking and closing past the K2 high-low. So there's a high-low right there, and price is breaking and closing past it. So with that said, you enter this for a short position right there. You're going for the 1030 split. You let it run, and there you go, full TP. That's an example of a triple confluence. So hopefully that makes sense, Gerald. I mean, if you're still confused about it, if I see another one, I'll show you, but they're like, they don't come up very often. They come up like maybe once every couple of days, or it just depends on how the market's moving. If the market's moving smoothly, it comes up more often. But if it's not moving that smooth, like the past couple of weeks, price has been choppy. It doesn't come up too often. So I'll try to show you another one. So just give me 1 second, guys. I'm gonna step away. I'm gonna go grab some water. Be right back. All right, guys, I'm back. Let's see. All right, so we're done with that. We'll move on to the next question over here. Oh, thanks, CT and Brock. I just saw your message. If we have time later, we'll go over those examples. I just don't think we have any. Let me just see 9:15 today, you said, or 9:17 actually. No, so I don't see one right here, Brock. There is a sell signal there, but there's no, it's not breaking and closing past any of the lows. So that wouldn't have been one. Let's see, CT said at 1940. I'm assuming that was from yesterday. So 1940. Uh, 1940. No, I mean, it would have been nice if it was like, if it closed below a low here, but there just wasn't one there. So yeah, they're kind of hard to find, but if I do see another one, I'll probably, oh, my bad, CT. CT said no, it was right before your last example. Yeah, it's all good. I forgot the date for that, but if we see it again later, we'll go over it. Anyways, next question. Let me see. Gerald's got a couple questions here. So I do see your question here. I'll just answer your most recent one, Gerald, and I'll go back up because I know you have another question. Gerald said, just want to make sure on the right page, your strategies don't work during times of choppiness or consolidation, and only work during trending movements. Like basically only look for a trade when price is trending. So not exactly, Gerald. I think you got the whole thing kind of confused. The requirements are that you look for a bias, right? It doesn't have to be it doesn't have to be trending if there's a bias. So like for all the strategies here, it says to look for a bias. That doesn't necessarily mean it's trending. It just means that there's a bias in the market. So like, for example, here, let me go to like a variation or something like that, right? Bias is different from trend because bias is just, or you're talking about trend. Trend is just going to be technicals, right? You're just looking at one aspect there. Retail sentiment and fundamentals don't indicate if price is trending or not. This just indicates where bias is. So price can be trending down. Like for example, here, price can be trending. Let me just show you like a fake out here. That if you're, because it just doesn't line up with like what you're referring to. So like, for example, right here, price can be trending temporarily down, right? So if you see price trending like this, you're going to get burnt, right? Because you're not looking for bias. You're looking for the trend. You only have one key to the whole picture here. The whole picture is that you're looking for bias, not trend. So if you're only looking for trend, you only have one part of the puzzle. You're not looking at retail sentiment. You're not looking at fundamentals. If retail sentiment and fundamentals over here are bullish, but your trend is bearish, you're like 100% going to get burnt because you're looking at the short-term movement here. You're looking for sells here, but in reality, if retail sentiment and fundamentals are bullish, I know that I'm going to be looking for a buy here because this is just temporary. So if you see price do that, you know, if you're looking at the basic thing over here for, you know, the trend, I'm going to be looking for buys while you're looking for sells. And then while you're looking for sells and price swings above here, I'm going to start looking for buys, right? And then you're going to get stopped out while we're going to be trading in the actual direction that price was supposed to go. So we're looking for bias. We're not looking for trend. Trend is only one aspect of it. And there's like a big difference between the two. So that's why when I look at, when I look for the bias, the first thing I'm looking for is retail sentiment. This is always going to be number one. I don't care about the trend. I care about what retail sentiment's looking like, because I want to do the opposite of everyone else. If price is trending down, majority of people are going to be looking for shorts, right? Because everyone does the same thing. They're all looking for the trend. You want to do the opposite of everyone. So if everyone's looking for a sell because it's short, and fundamentals here are green, you know, I'm going to outsmart everyone and I'm going to do the complete opposite of what everybody else is doing. So while everybody's selling, I'm looking for price to swing back up, and I'm going to be looking for trades in that direction. So hopefully that makes sense, Gerald. I know you haven't been in K2 for a while. You kind of took a break and then you came back. So I think that might be where your confusion is at. You're kind of like mixing like stuff you learned from before and stuff you learned from other groups with like what we do here, because we do the opposite of everyone else. So like when everyone's looking to trade in the direction of the trend, I'm looking what bias is indicating. And then even though price is trending down, I'm looking for it to swing back up in that direction. So yeah, trend and bias are a bit different. Technical bias will fall within your analysis of trend, but everything else is going to be opposite. And technical bias is always going to be the weakest of the three confluences that we use. So yeah, no problem, Gerald. Let me go back up it and answer your other questions, because you have a couple other here. Let's see. All right. So your next question is the high-low strategy. Let me see if I could find one over here. So I'll put the requirements for the high-low there. Let me see if I could find one over here. Price was kind of choppy today, so let's see where price pushed from. No, there's no buy signal there, so there's not going to be a high-low entry. Here, let me go over here. This is actually, oh, you know, there was a triple confluence right in front of me. I didn't even realize this. Sorry, guys. So there was actually a triple confluence right here, or I don't know if I did look at this, but so the triple confluence, high-low is like one of the strategies within the triple confluence, but I'll show you this example here because it falls under both of them. So we'll go over the high-low scalp first, and I'll show you how this lines up the triple confluence. I just didn't realize that we had one right here. So going over the high-low strategy, the high-low scalp, you're looking to confirm the previous swing high and swing low. So right here, we have a swing high. And right here, we have a swing low, right? So with that said, in order to confirm the swing high and swing low, you want to make sure that 5 candles have passed after it. So the lows right here, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. That's the low. Right here, you have the high. You have 1, 2, 3, 4, 5, 6 candles. That's going to be the high, right? So in order to apply the strategy, you're looking for the swing low, which is right here. Second requirement, you want to confirm that price breaks and closes past the previous swing. So this candle right here has broken and closed past this low, and it's going to satisfy requirement number 2. Requirement number 3 is you want to confirm you're trading in the direction of momentum. So right here, you have a sell signal, so you're okay with taking sells at that time. Lastly, you want to confirm that price is not ranging or consolidating. You can see that before price broke and closed below this line, price was actually ranging, right? Price was just going back and forth within this area. Price finally broke below, so it's no longer ranging or consolidating. The last requirement, you just want to confirm that price has not touched the previous swing before it's break and close. So right here, price broke and closed. All these candles here do not touch the low, right? So with that said, you can enter this for a short. You take that for a 10-30 split. You let it run. And there you go, full TP. This falls in line with the triple confluence because it's the same thing, right? You're looking for a sell signal right here. You're looking for it to match the trend meter. Trend meter is red. Third, you want to confirm that price is below the pivots for a sell. The pivots are right here, price is below. All requirements are met. The last one is just you want to confirm that price is breaking and closing past the previous high low. It's breaking and closing past the low right there. So again, you'd enter the same parameters and this would hit as a triple confluence. So this doubles up as a triple confluence and a high-low scalp. Let's see, other than that, let me scroll up real quick. So that's it for the high-low. Hopefully that makes sense, Gerald. If you want me to cover anything else, let me know. Or if this is still confusing to you, I can go over it again or find another example. This comes up more often, so I can find more examples for this. But you can see that it lines up with the triple confluence. Your second question or your third question is, can you go over the V2? Sure. So let me see if I can find one here. So the problem with looking for any of the variations today was that there was no bias in the market. So it's kind of hard to find one that's one that we would actually have taken. But I'll try to see if I could find an example here. But I think a lot of these were not entries that we would have taken because there just wasn't any bias in the market. So there wasn't really a direction to take. But I'll just show you this as an example right here. It's not a great example, but it fits the requirements. Actually, we can't take this one because there's a momentum signal on it. Let's see if I can find another one here. All right, here, no, they all have momentum signals on them. Okay, here we go. Let me turn off the pivots. So I can't confirm the requirements for the bias because this is later in the market. But I'll just show you the example of the V2. So V2 is right here. Basically, you're going to confirm the high-low using the high-low indicator. As you can see at this point, we have a low. So first requirement is identify the high-low. We've already identified it using the high-low indicator. Second, you want to confirm that the high is a green or the low candle is a red. The low right here is a red candle, right? So first two requirements are met. The third requirement is you want to confirm the candle following the high-low is a strong candle. So a strong opposite candle. So right here, you want to make sure that this is a low, this is an opposite green candle, and it's also a strong green candle, meaning that there is little to no wick, or actually there's no wick at all on the bottom for a buy, or vice versa for a sell, no wick on the top. So for this, we're looking for a buy because we're looking for basically a reversal. So you can see that price is pushing this way. We're looking for price to just push up and reverse to catch that little push for the variation. So with that said, we have a low with the red candle. We have a low right here. The following candle is a strong green candle. You have a pending momentum. Pending momentum means that the next momentum signal is going to be in the direction of your trade so that you get that extra push in that direction. You'd enter right here on the open of the following candle. The same thing, 1030 split. You let it run, and there you go, full TP. And that's the variation. This is the reason why you want a pending momentum signal, so that when you have the reversal, when the momentum does come, it's going to shoot right past your TP. So it's a quick win. So there goes an example of the V2. Gerald's now asking for a example of a V3. Let me show you that. So let's see if I could find one here. All right, so here's an example right here. I mean, it's not gonna be a good example because it doesn't fit. I mean, it's gonna fit the requirements, but it's not gonna be a big enough move. So this is technically a V3 here, guys, but the main issue with this is that the stop loss is just too tight. You want to have it at least at 300 pips. So I'll just use this as an example to show you guys like what the V3 looks like, but this isn't going to be an actual entry because we don't have the stop loss requirement there. I mean, it's not always required, but the thing is, if your spread is 110 pips, when you enter this trade here, you're going to be in the negative 110 pips already. So like, for example, if you enter this trade here and your stop loss is super tight, this is usually what your, what your spread would look like. If your stop loss is right there, like too close, like 200 pips, then if it pushes back, even just a little bit, you're going to get stopped out right away. This is why you need to compensate for the spread. I mean, depending on your broker, spread's usually going to be about the same, but I'll just use this as an example to show you guys an entry for a V3, and I'll find a better entry, hopefully, where it does fit, basically all the requirements, but it doesn't come up. I mean, it usually comes up often, but lately it hasn't. Anyways, here's the requirements for the V3. So identify the high low. It's pretty much the same thing as V2. You want to confirm that the high has a green candle. This high here has a green candle. Falling candle is opposite. So it doesn't matter with a strong candle requirement. This one's just an opposite candle. So red high, green high, the opposite candle is red. So with that said, you have requirements 1 and 2 met. 1 through 3 actually. Next, you want to confirm a pending momentum. Right here, we have a buy signal. So the next momentum is going to be a sell. And you want to confirm the direction of bias. As I mentioned earlier, we didn't have a bias this morning, so this is going to be hard to really confirm. However, I do remember when we got off the live, we still had that sell bias going, right? The bullish bias never confirmed. So technically, we did have a sell bias running at this time. After that, you would enter the trade, let it run. And as you can see right there, that's how it would have ran, but it's not a good entry because we didn't have a strong bias. Let me see if I can find another example here where it actually, fit the requirements, where it fit the requirements and it actually was a decent stop loss. Like for example, right here, another V3, but the stop loss was too close. I guess this one's a little better though. So let me go over here real quick because it's a bit closer to the 300 pip stop loss. I mean, if it's really close like that, you can just put a wider stop loss. It's doable. So again, right here, you want to identify, let me turn off the session so it's not in the way. You want to identify a high low. So we got a low right there. You want to confirm that the low is a red candle. The next candle is opposite. There's a pending momentum for a buy there. You would set up your trade right there. Your stop loss, like I mentioned, it's really close, but if it's this close, you can just extend it out a little bit. You have it set to 300 pips. It's a 1-to-1 risk reward. You let it run, and there you go, full TP. So that's how the V3 would work. Other than that, let's move on to the next question over here. Barack said, "Good day, y'all. In late duty calls, but made it." Yeah, definitely. Good to see you here, Barack. No problem, Marlon. I just saw your message right there. Gerald is asking, can you speak about trading during news before or after it when dealing with trading the prop firm funding? With prop firm funding. I mean, the rules are the same, Gerald. For US 30, I mean, depending on your broker, I don't think there's a restriction for US 30. You have to pull it up on the calendar. It'll tell you if you can't trade US 30, but in general, you shouldn't be trading during news regardless. So, I mean, if you're asking me, like, how would I trade during news? I wouldn't. That's the main thing. I've never traded during news. I always recommend people don't trade during news. You're just gambling at that point. So I think my best advice to you is to just not trade during news. But I don't think there's a restriction for US 30. There's a restriction for like certain assets. Like if you're trading gold, it'll tell you can't trade gold. Or if you're trading Forex, it'll tell you can't trade Forex. But I don't think there's a restriction for US 30 because there's no news that directly affects US 30, right? Everything is indirect. Like for example, when the Fed's speaking, it's going to affect the US dollar, right? But the thing is US 30 is a US asset. So even though it doesn't directly affect it, it will affect it one way or another because there's a lot of things tied into the Fed or the US dollar. So trading news, I would just recommend you don't trade news. If you want to see what I do when news does come up, I would recommend just watching any of the live sessions because there's news almost every day. So you can see, like what you can do, Gerald, is you can just go up to the calendar and just look for any days that have news. If you see a day with a lot of news, just pull up the live session. Like you can pull up March 29th, right? We had news at 7 o'clock. You can see what I do when news happens. I don't take any trades. I wait for a reaction in price. And then what happens is we mark up that news price and we identify if price ends up going back to that news price after it's pushed. So my main advice to you trading during news is to don't, because you're just gambling at that point. You really don't know where price is going to go. It doesn't matter if news is positive or negative. It doesn't necessarily mean price is going to push in that direction. So short answer to your question is don't trade during news. Next question here from Be Motivated is asking, how do you automatically set your stop loss and TP on DOM? Watches a bunch of videos, but no clarity on it. So I can't drag over my Ftmo chart because I have like 3 screens here, but the way that you would set it up is you'd right click on your MT4 chart, click on depth of market. That's going to pull up the DOM. In order to set up your TP stop loss, you need to put your stop loss in the left box. So if you want to put a 300 pip stop loss, you'll put that at 3,000. And then on the right side above buy, you're going to put your TP. So right there, you'll set that to, whatever you want to set it to. If you want it set to 300 pips as well for a 1-to-1, you would just put 3,000 in there. It's technically 300 pips, but the extra 0 is going to compensate for the 0.0 that's usually at the end of the number. You can't put a point in here, so you just add another 0. It's going to fill it as a 300. And on the middle, you're going to put your lot size. So that's how you would set it up on the DOM. Once you enter buy or sell, it's going to enter a market order, and then from there, it's going to set up your TP stop loss automatically. So not too difficult, but I would recommend practicing it on a demo account first so that you know how it works, and then maybe play around with it. But it's not too difficult. Once you set it up, you should be pretty used to it after the first few tries. So hopefully that helps motivate. I just want to make sure that you got that. But I know it's something a lot of people get a bit confused with. Next question is from Rain. Rain's asking, hey, take a look at the type 2 V1 we were discussing earlier to see if it's something we consider. Yeah, let me go back to your question, to what we were looking at earlier, Orain. So yeah, Orain earlier asked about, it's basically another V1. Let me pull it up. So what Orain was discussing earlier, basically he's looking for like V1 entries, but instead of using the wick, he's using same body. So that's something that you can probably go and back test. Let me see if I can find some examples here. Yeah, like one right here. This is actually a perfect example right here, right? Maybe this is something we can continue to test. Maybe we'll use it as a backup, I guess. So like, for example, here, this is something that I don't necessarily want to be teaching you guys because this isn't a strategy, right? This is something that Orain kind of just identified, which is perfectly fine. Because the thing is, when he starts to identify patterns in the market, it's basically the same strategy as a V1, except using a double wick, we're just using a double body. We're just ignoring the wicks. One thing that you can do to identify this easier is you can just go to settings, and then you can go to appearance, and you can just hide the wicks. Where's the wicks at? Where's it at? Okay, wicks, turn that off. So if you really want to go back and test this, Ryan, you can just go back to your settings right here, turn off your wicks, and then you can literally just look for high lows and then look for opposite pushes. So like, for example, right here, it's basically a variation, but it's opposite of, you're just not looking for the wicks, you're looking for bodies that match up. So again, right here, same situation. It's the same 10-30 split. And this isn't an official strategy, guys. So if you guys want to test this out, feel free. I mean, it's something that works because I've tested it before. I just kind of gave up on it because we already had something set up with the V1. But yeah, I mean, if you were to apply this, again, right there, full TP, see if we could find another one here. Because it does work, don't get me wrong, it does work. I just haven't really been using it very much. So, because we already have, ours that are already set up. So there's no pending momentum there. It's technically another one right here. So same situation. 1030 split. Full TP right there. So I mean, you guys can see that it's not really that difficult to identify. It's actually pretty simple. There's another one right here. Same thing. Got the low right there. Enter that for a long. 1030 split. And this is a brand new strategy, right? We haven't even really tested this. It's just variation different with different setup. Another full TP right there. Right here. Actually, there's no pending momentum right there, so that wouldn't fit. This right here would fit though. There's actually a lot here that came up. So, I mean, Array might be onto something. Actually, no, there's no low there. Sorry. The low is like right here. It's hard to see where the low's at when there's no wick, because it's based off the wick. There's another one right here, but there's no pending buy. I mean, you can probably ignore that pending buy if that's, you know, this is probably gonna be like a version 4 or something, or, you know, a variation to the variation. There's another one right here. Yeah, I mean, pretty much every one that I saw right now seems like it did hit TP. Doesn't even look like you need a bias for this. You can kind of just take every one and it hits pretty solid. Again, right there, full TP. Yeah, maybe I'll play around with this and then I'll just take, you know, I'll take entries when I see them. Maybe I'll make, again, I can't tell if this is probably not the high because this candle over here looks like this one is the one with the wick. Again, right here. So maybe this is something that could be used, maybe use different requirements, maybe no pending signal requirement, because it looks like it still works perfectly fine. Like right here, we have a buy signal, no pending, but if you were to take that there for a long position, 1030 split, let it run, full TP. So I mean, it looks like it works pretty fine, right? You know, something that we would have to test, obviously, a bit more, but it does look like it's a pretty nice strategy to apply. It's just a little slight variation to the V1. It's nothing even crazy. But yeah, again, right there, full TP. I mean, you could probably even go for even more. Well, I wouldn't push it. You know, I'd probably stick to the same parameters until like we really figure out how well it moves. Yeah, I mean, it looks pretty solid. You know, we can probably do either 1-to-1, like for this, for example, is a bit of a bigger move. Instead of the 1030 split, you can go for 1-to-1 and it hits TP there as well. I mean, either way, if you use a 1030 split, it still would have hit TP as well. So yeah, no, I mean, it looks like something that can be applied. It's something that would have to be tested more, but overall, it does look like a pretty solid, you know, pretty solid strategy to apply, even right here. And this is something that I did apply before. This is actually how the variation started. I was doing this, but when I saw the double wick, because you can see here, it's the same thing, double body, but double wick, it still worked perfectly fine. So yeah, no, it looks good. So great idea, Rain. If you guys want to play around with it, feel free to play around with it. I'll play around with it myself. Maybe we'll take some during the live and we'll just use it as speculative moves. But I mean, it looks pretty cool as is. Question from Gerald. Gerald said, I know you have like 7 or 8 K2 indicators or so. How many or which are the main ones you use from a day-to-day basis? Scalping on the 1 minute. So you know, it goes back to what I was saying earlier, Gerald. I use all of them. There's no shortcuts to this, right? I feel like you're trying to find a shortcut. Like you're trying to figure out which ones to focus on, which are not. Each strategy uses different indicators. So, I mean, we use every single indicator aside from maybe the V1 or V2 zones because we're creating the high lows. So like if you're using something that conflicts with like what we're already applying, like for example, we're using the high lows here for liquidity, right? You're not going to turn on the SR because you're going to have so many lines on your chart. So it just wouldn't make sense. But we use literally everything. Gerald, you got to figure out what, like, it goes back to what I was just mentioning earlier. You got to figure out what works for you. Because if you're applying, like, you know, there's different strategies that are applied. If you're applying the 10-minute snipe, you have to have the SR on because that's how you find the zones. If you're applying the pivot scalp, you need the pivots because the pivots are required. If you're applying the triple confluence, you need all the indicators, right? So I think what you got to do, Gerald, is you just got to figure out, you got to understand like how the strategies work and what you want to apply. Because the thing is, I'm applying all the strategies at the same time. Like I'm applying them all during the live session. There's no one indicator. There's no one strategy I'm using. I'm using all the strategies and I'm using all the indicators. So I, you know, like the main thing that I'm trying to get across to you is that there's no shortcuts, right? If there's one that you want to use, then yeah, focus on that one. But during the live, I'm not focusing on just one strategy. There's like tons of strategies that we're applying. There's tons of indicators that we use. You know, it depends on how accurate you want to be with your trading, right? There's a reason why we have such high consistency at K2 is because I actually look at everything. It's not difficult to look at everything. It's just understanding what everything does and how to use it. So, yeah, I know you're just trying to get caught up. But the thing is, I feel like you're still trying to take shortcuts while you're getting caught up. You kind of want to just skip the stuff that you feel you don't need to know, but realistically, you need to know everything. Because, you know, if you didn't, I mean, if you didn't need to know everything, then you'd be a great trader just doing the bare basics, right? But the bare basics don't work to be consistently good at trading. So, you know, my advice to you is just, you got to get back on the wheel. I mean, you've been gone for so long that a lot of the stuff doesn't make sense to you, but we've been consistent. I mean, what you can do is you can watch every live session for the past, I don't know how long you've been gone. You've been gone for maybe like a couple months, maybe a year now. Just watch every live session because we're doing the same thing every day. But there's no shortcuts to this. Like you're not going to be a great trader applying, well, you can be a great trader just applying one strategy. Like Steven's like one example, right? Steven's not here, but all Steven does is apply the breakout. That's literally all he does. You know, he applies a breakout every day. If you look at his profits here, he's super consistent. Like today, he sent me his profits. He made 1,000 today. He makes 1,000 a day and he's done, right? He just took the breakout, full move, made his 1,000. He's done for the day. So, I mean, technically, yeah, I take that back. You can be really good if you master one strategy. But the thing is, you kind of want to know how to read the chart and what everything does and what the chart's telling you. Because, you know, like it's not always going to play out. Like there's going to be days where Steven doesn't take a trade, but he's consistent every day. He's looking for like that one win and he's pretty much done for the day. So you just got to figure out what works for you and then master that. And then from there, you'll have building blocks. Like for example, if you just want to apply one strategy, then, you know, you're just going to use like maybe one indicator or two indicators. And then from there, you can start to add the sessions, you can add the high lows, you can add whatever you want to get better at increasing your probability of winning. But if you can't get the bare basics down, you're not going to get everything, right? So yeah, and I agree, Joe. You just gotta get back on it because I know you've been gone for a while and you know things have, the market's changed. Market's always changing. So the thing is, even though the market is changing, we evolve with the market. We don't just stay doing what everyone else is doing, right? You just got to keep changing with them. So yeah, no. Other than that, let me see if there's anything else that we are going to look over. Here, let's see, another question over here. Gerald's asking, do you still trade Forex? No, I don't trade any Forex at all. Gerald's asking also, why don't you trade after 8 a.m. your time? Because that's just the time I trade, Gerald. I mean, it goes back to what I was just explaining to you earlier. You know, you got to have some sort of game plan. you know, what happens with a lot of people is you try to trade all day, you end up blowing your account, right? And I'm sure that's happened to you because, you know, I've known you for a while and I've seen you, you trade with me sometimes and you do well, and you trade on your own time and you blow all your, like you blow all the profit that you made with me. So, you know, there's a reason why I'm consistent. There's a reason why I don't lose very many trades, because I have a set time where I'm just focused. What happens is like, I'm very focused from like 6:30 to 8. I can like knock out, you know, X amount of trades during that period. Versus trading all day, getting fatigued and making mistakes, right? So it goes back to what I was just telling you earlier. You got to figure out what works for you. And if you think you could trade 24 hours, then trade 24 hours. I figured out that my time frame 6:30 to 8 works perfect for me. And I could do whatever I want after that, right? I trade in the morning and then I go on with my day. You know, that's how like a lot of successful traders are. They have a set period where they trade. They don't trade 24 hours a day. So here, let me keep coming back to the same question. Gerald's asking, what strategy or strategies would you suggest for me to start trying to learn and master starting out? There's no one strategy, Gerald. You should just go and try every strategy and figure. There's not going to be one that's easier or harder for you. Like I could give you the very easiest strategy to break out and you can still screw it up, right? There's no one strategy. Yeah, exactly. Just like what CT said. CT said, pick one and master it, then move on. There's no one strategy I can tell you to do, Gerald, because the thing is, you've been with K2 for a while, well, previously, and you weren't able to master any of the strategies, right? So, you know, probably use that as a lesson that if you focused on just one strategy and you actually got it down, you probably would have done a lot better versus you trying to learn every single strategy. So, you know, your questions here are like, I can already see what you're aiming for. You're aiming for what's the easiest, what's going to get you going. The thing is, one of them could get you going or none of them could get you going because you're not really putting any focus on this one strategy. So all your questions kind of go back to the same thing that you asked, you know, pretty much this whole session. You're kind of asking what indicators to use, what strategies to apply, what works best for you. I don't know what works best for you. So you got to go and try whatever strategies that we have and figure out what applies to you the best, because I can't tell you, I'm not you. So I don't know what you like. I don't know what you're good at. I don't know what stresses you out. You know, if scalping stresses you out, then you should definitely not be scalping. But yeah, I mean, you're going to figure it out on your own, Judd, and you got to actually put in the work, right? You can't just keep asking me what to do without actually putting in any work. So my advice to you is just try all the strategies out, figure out what works best for you, and then master it. Because all the strategies work. There's nothing wrong with any of the strategies. It just depends on like what applies to you the best. So other than that, let me scroll up and see what other question we have here. Barack's asking, was thinking, is it possible to automate the strategies? No, there isn't. I mean, there is, but there isn't. Because the thing is, you can't automate bias, right? So yeah, you can automate like strategies, but you can't, there's no way to confirm, like you can't put data in to see what the retail sentiment is. You can't put data in to figure out what the fundamentals are. And those are the main things. So if you don't have a bias, you're not gonna be taking trades in that direction. So yeah, you won't be able to do that. I mean, you can do it. It can be automated, but if it takes every trade for you, you don't have a bias, you're probably going to end up with a lot of wins if you're also going to end up with a lot of losses. So no way to use that specifically. Brock's asking, the reason I'm asking is because sometimes you're not seated on the charts when it happens, but you can manage to take a peek and confirm and enter. So that's one thing that I don't recommend you do, Brock. And I know it's an issue for you because you're still working. So the thing is, you're either going to be focused on the charts or you're not, right? If you're like half-assing trading, you're not going to do good in trading, right? You can't just have an alert that says, hey, Brock, take this trade, or hey, Brock, there's a trade here while you're doing work. Or, you know, there was one member in the group that actually messaged me today, and unfortunately he blew his funded account. What happened was he took a trade. This is the first time he's ever taken a trade during driving. Like he was listening to me on the Zoom, but he was driving. So he took a trade without actually being focused on the chart. What happened was he blew his account because it went past his daily limit. That's the same thing with you, Brock. You can't be like half-assing trading. Like you can't be like 50% focused, 50% not focused. just because you get an alert that says, hey, Brock, there's a trade here, and you see that there's a trade there, but there's no way for you to confirm bias because you're not actually on the charts. So even if there was, well, there is a way to do it, but I'm not going to create it because I don't want to create lazy traders, right? I want you guys to actually know what you're doing, and I want you guys to be fully focused. So short answer to your question is yes, there is a possibility of having it, but am I going to create it? No, definitely not going to create that because I don't want people to be like not fully focused when applying strategies. Because what happens is I create that and then you guys depend on that. And then what happens when you guys lose? You guys are going to blame me, right? Because you're going to say, oh, Sean created this alert. It told me to take this trade or it told me to look and I took it, but I lost. Why did I lose? Because you weren't focused and you also weren't confirming the bias. So yeah, I'm not going to create that. I'm not going to create that for that specific reason. Because I already know what's going to happen. You know, people are gonna depend on that, and I'm going to get blamed for everything. So yeah, unfortunately, no, it's not going to be created. Next question from Gerald is, do you have any strategies based around price rejecting off and retesting off a pivot? Yes, that's going to be the pivot scalp strategy, Gerald. Gerald is asking, how do you determine if there is a lot of volatility or a good amount of volatility in the market? I mean, you can just do it by measuring the chart. Or just measuring where price is going, Gerald. Like for example, right here, if you measure this, price is moving less than 100 pips, right? That's going to indicate that there's no volatility in the market. If you're measuring something like this, and you see it's moving like 1,000 pips, then yeah, there's a lot of volatility. So it's not really that difficult to identify if market's volatile or not. It's just measuring the distance of price, right? Like for example, right here, price is moving right here back and forth. You measure it. It's moving like about 1,000 pips. So volatility is pretty decent around this period, right? Because the thing is, if you're like most of your trades, like you're going for about like 500 pips of a TP. If price is moving more than your TP, then yeah, market's volatile. Vice versa, if you're measuring areas like this right here, and it's moving like 400 pips, it's going to be impossible for you to hit your TP, right? So that's like one way to do it. It's not really too difficult. I feel like a lot of people, it's difficult for people to identify when market's volatile or not. You just got to measure the movement in price. You got to make sure whether it's, you know, it's moving enough to hit your TP or if it's not, because that's going to be the main thing to look at when identifying, you know, whether it's a good time to enter the market or not. But volatility is not even the main thing. The main thing is to identify if there's a bias or direction. So if you can identify this, like for example, say you're trading right here and you're using, you know, the K2 high low indicator to identify where these high lows are, right? For example, right there, right there, right there, and right there, right? So you can see right here that price is just ranging about like right down this area. And if you were to measure this right here, price is only moving 150 pips. This is barely going to cover spread. Spread's 110 pips. So if this is the range right here, there's no volatility. Plus, you wouldn't want to take it because there's no direction. So that's how you would determine if there's, you know, a decent amount of volatility or not. Scrolling down a little bit. Let's see, Melanie said, when you get a chance, please look at your Telegram message. Yeah, sure, that's fine. Let's see, so Melanie sent me a message over here. Melanie said, these are trades I took today. Can you please tell me if I was looking at everything right? I think I confused the difference between time frame strategies, but I've only been using the 10-minute time frame. Oh yeah, sure. So I can see you taking entries over here, Melanie. So you were on the 10-minute time frame. I'll go over there right now. So here's the 10-minute. I could already see the first entry you took was not one that I would recommend taking. Because it was so close to market open. We don't take trades around market open right here because you get these big spikes in price, right? So you were trading the 10-minute right here. And it looks like you took this trade. Okay, so let me see, I take that back. For this, because your entry came up like at 2 o'clock. The problem with this trade right here is that I don't think you confirmed the bias. It did fit the requirements because it looks like you were applying the pivot scalp strategy. or intraday strategy. I'm not sure which one you're applying. If you have like the specific strategy that you applied, because I can see here you took this one. There's a couple different strategies that could have applied for this one right here. So like, for example, if you're taking this for a buy, and I'm trying to see where you set your stop loss at. I don't know what your TP stop loss was here, but I know this is the trade that you took. So it looks like you might have, or I'm trying to figure out, like, let me see. So yeah, if you're applying the pivot scalp, let me put the requirements here. If this was a pivot scalp, then this was not an actual entry for the pivot scalp. I don't know if you're, let me see if you're talking about. The pivot scalp is not to be applied on the higher timeframes. If you're applying this on the 10-minute, you would be just applying the pivot strategy. So for the pivot strategy, it's basically the same thing, except for this right here, you would be setting this to here, the strategy here, let me just redo it because this strategy is different. The scalp is going for like these smaller moves here. You're on the 10-minute, so you're no longer scalping. If you're on the 10-minute, you're actually trading intraday because you're holding on to this trade for like a while. But in order to, here, let me just put this here. This is the K2 pivot strategy. So the pivot scalp is like below like 5 minutes. It's 5 minutes and below. You're on the 10-minute here. So with that said, you get more of a like you go for a bigger push. You're looking for a bigger move here. So like for this, you want to confirm. One is going to be confirm. Sorry, I haven't applied the strategy in so long. Let me just pull up the strategy right now. I can't remember what the requirements are for that because we don't really apply that one as much. I know the strategies are a little different though. So I'm just going to pull up the actual strategy video here. Trying to figure out where is that. Yeah, it's crazy like how long it's been since we applied that pivot scalp. That was like mainly a Forex strategy. Because the thing is with when you're trading on US 30, it's kind of hard to trade strategies like that because it's not, it doesn't move the same as Forex where you have like these pullbacks and then it pushes back. Okay, so here is it. Right here. All right, so let me just move this over here real quick. Okay, so you can see here that the strategy is like it's a bit different. So let me just, it's been a long time since I applied it. You're looking for identify a strong trend, identify retracement, rejection of K2 pivot, identify K2 momentum. Okay, so this is what you're looking for right here for this. The strategy is a bit different. And this is on the higher time frame, anything above basically the 5 minute. You want to identify a strong trend. Strong trend. 2, you want to identify break and retest K2 pivot. 3rd, you want to confirm, what's the requirement? Confirm valid or identify valid K2 momentum signal. And then lastly, enter open following. So for this one right here, you're basically looking for, like, you don't have a strong trend right here for this buy. And the way to identify the trend here on the higher time frames is basically you're looking for something like this. You're looking for price to break above, retest, and continue to push right here, right? For this specific entry right here, it didn't really confirm a trend, right? Because price was below, and then it would have just came like right above right here. This would technically be a intraday entry if you're applying the K2 intraday strategy. But again, like for all these strategies, this is something that I'm going to implement more in the new videos, is that we start to implement now bias. Before, when these strategies were initially created, we didn't use bias because it just wasn't something that I thought people needed to learn because I figured everyone kind of knew. But now that we've gone further in time, I realize that like nobody knows how to confirm the bias, right? So it's not a requirement that I met because I thought it was something that everyone kind of figured that everyone would be applying. Like we didn't use fundamentals back then. We also didn't use sentiment because I was looking at it myself, but I wasn't really telling people like, hey, you should look at this because I figured everyone knew how to do it, but literally nobody knows how to do it. So for this strategy here, you want to identify a trend. For here, the first requirement wasn't met because there's obviously no trend there. Let me show you an example if I could find one here of it actually being okay, so here's an actual example. So again, right here, there's no entry at that point. The thing that you were, I think that you were applying in differently was that you were applying the pivot scalp strategy, which is meant to be for the 5 minute and below. So let me show you the difference between the strategies right here. So this is for the 3 minute. Basically, you can see here that you're looking for a momentum signal. You're looking for it to be below or above pivots, 3 or 4, and then you enter after. So this is like for a scalp, because you're looking for a really small move, but since you're on the 10 minute here, you want to apply the actual pivot strategy, which is for intraday. And you can see that they vary differently because for this, you're looking for a stronger trend. So let me show you an example of applying this on the 10 minute here. Right here. And this is not to say that this strategy doesn't work on the 10 minute. It's just that it wasn't meant for the 10 minute because it's for a smaller move. For example, right here, let me just go back and show you the strategy over here. Okay, so for example, right here, applying the pivot strategy, which is the normal pivot intraday, not the scalp, you're looking for price to enter a strong trend. So you can see right here, price is trending downwards. The reason that you can confirm this as a strong trend is that when price is below the pivots and they're spread out, you can identify that price is probably going to be pushing even stronger, right? Like it was same for like right here. The price was above and the pivots were spread out. You can see that price pushed up pretty heavily, right? So you'd identify the strong trend right there. You want to identify price break and retest of the K2 pivot. So price breaks below, and then you can see the retest right over here, right? Pretty much all these wicks. So the first two requirements are met. Last, you just want to confirm a valid K2 momentum signal, which would be this right here. You enter a short position at that point. Typically, what you would do here is you can place your stop loss at the previous swing, which could be right here, which is 420 pips, or you can put it up here depending on how big of a move you're going for. But just using this, for example, if you were to set that at 420 pips, this would have been your entry. And if you were to let it run, you can see right there, it does hit full TP. So I'm trying to see if like, do you see the difference here, Melanie, with these two? Because the strategies are a bit different. But you can see that like once you find a good trend on the 10 minute, it's pretty smooth, like how it moves. And then again, if you see another one, you could take another one again right here. Again, right here, I think. So again, right here, there's another one. And these are just different time frames because you're going for a bigger move. You plan on holding this for a bit longer. So again, right here, same situation. You see price kind of swing below, come back up, retest the sessions, right? Or retest the pivots. And then again, it's still in a strong sell trend. You see that price is rejecting off it. You have a sell signal right here. You do the same thing again. You enter a short position, place your stop loss at the previous swing high, which should be right there. This is for 1,005 pips, 101, and you let this run, and there you go, full TP again right there. So yeah, the strategies are a little different. You just don't want to apply the scalping because you're looking for such a quick move. I know you're probably trading on the 10 minute because it's easier and it's like less risky in some circumstances because it doesn't move as fast and you can identify these trades easier. So maybe go back and watch the video over here. You probably skipped over it because I know there's different videos here. I know there's the pivot scalp strategy, which is different, and then the intraday, and then swing, like it's the same thing, but on a higher time frame. So if you want to go like on the 30 minute or hour or 2 hour or 4 hour, you can do the swing, but I don't think it's one that I necessarily apply on the US 30 because it's such a fast moving asset. So yeah, definitely no problem, Melanie. And sorry that you got caught in that trade. I know this is still new to you, so you're still trying to get the feel for things. But I'm glad to see that your other ones here hit. So as you can see, it still does work. It just depends on the type of market that you're trading in. So yeah, hopefully that cleared up a lot of stuff, and I'm hoping you do a lot better with the entries there. But yeah, no, you still did a good job either way. It's just when you go on a higher time frame, you kind of have to look at things a bit differently because the price moves a bit different, especially for US 30. Other than that, let me scroll up a little bit and see what else I need to answer. Okay, let's see. Janae's asking, will you explain how to determine if the three confluences are pointing towards a sell or a buy? So yeah, sure, definitely, Melanie. Or no, Janae, sorry. Janae's asking that question. So Janae's question here is, I think I have it. Do I have it set up here? No, it's not that. Let's see. How do I set it up here? So this is how you would confirm bias confluence. So first you want to confirm retail sentiment. To fundamental. And lastly, I'll just save this as confluences. All right, so in order to confirm the bias, so Janae's question is asking, how do you determine confluence is pointing towards a sell or a buy? So in order to determine that, first step is to look at retail sentiment. You want to confirm whether retail traders are 60 to 65% in the short or in the long. So for example, here, you're going to go to IG sentiment. Right here, you're just going to imagine that this says 65% short, right? So you're looking for 65% short. When you see that, this is going to indicate that 65% of retail traders are selling. So if they're selling, you want to do the opposite of what everybody else is doing. So if it says 65% short, this is telling you to take a buy. If you go over to the fundamentals, I know this says 18, but just say, for example, this says plus and it's green, 120 points, right? So going over here, if your retail sentiment is 65% for short, and then fundamental bias is over 100 points, green, which positive, this is both going to tell you to take a buy because your confluences here are telling you that fundamentals are pointing to the upside and retail traders are on the short. So you want to do the opposite, but you also want to trade in the direction of fundamentals. So those are the two things you're looking for. For the technical bias here, this is going to be, if you have these two already met, then you're going to look for something like this in the chart. Let me see. You're going to look for something like this in the chart, right? So if you already have confluences for retail sentiment indicating that you want to take a buy, and then your fundamentals are also bullish, then these are both telling you to take buys. Your last confluence here is technical bias. There's a couple ways to do this. If you already know that the bias is strong for a buy, then you don't have to go and confirm bias changes in the market, right? You could do it if you want to. Like if you want to be extra careful and you for sure want to look for that confirmation on the technical side, you can confirm price breaking close past the structure, retest. So breaking close, retest, and confirm. That's one way of doing it. You don't have to do it that way if you already have bias for the other ones. But in situations where there's no bias, then you have to actually be more sure about it, right? Otherwise, you can just look to see if price is above the pivots or the trend mirror screen or both, both is better because you'll have a better confluence there. That'll indicate that you have a technical bias. So, just recap here. If your retail sentiment is 60 to 65% short, or it can be higher the better, your fundamentals are 100 points in the green. So it can be 100 points, it can be 120 points, 150 points, 200 points, whatever it may be. If those both indicate that that's a buy, plus you have a technical confirmation here, then that would indicate that your bias would be a buy, right? You just take sell, you could take bias here. So whenever you get entries, and then again right here, just like as I mentioned, you can also confirm it if you really wanted to, which I would recommend. You can see price broke and close above it, it retests it, and then it closed above the high right here. So with that said, you have like a super strong confluence that price is going to keep pushing up. And then as you can see here, price does continue to push up even higher. So that's how you would confirm that it's a buy. For the opposite, you'd be doing the same thing, but just opposite things. So in order for you to look for a sell or to have a confluence for a sell, you want to make sure that retail sentiment is 60 to 65% long, indicating that there's 60 to 65% of retail traders on the long side that are buying. So you want to do opposite of them, and you look for sells. Same with the fundamentals. In order for that, you need this to be red, negative, below 100 points. So it has to be like 120, 150, 200 points, etc. That would indicate that you want to take a sell. Lastly, I also want to confirm that the technicals are for a sell as well. So if you were to go over here, so say retail sentiment was 65% long, fundamentals were 100 points in the red, and then your technical bias here was prices below the pivots, trend meters red. That would indicate that your bias would be here for a sell. And then you can see price just continue to drop lower, right? Because that's how you confirm the bias. So yeah, sure, no problem, Janae. Hopefully that answers your question. I know it's a little bit confusing. You have to like see it real time to really see it in action. So hopefully that kind of makes sense to you. But I know for some people it's still a bit of a confusion. Sure, awesome. Glad to see that it worked out for you, Janae. All right. Other than that, let me scroll up a little bit, see what's the next question here. All right, so next question is, all right, so Gerald's asking, can you explain the little magnet tool on the left side as far as trading view tools, and do you use it? Yes, so I do use the magnet tool to set my high lows. Basically what the magnet tool does is it'll set your whatever you're using. Like, so for example, if you're using horizontal raise and you wanted to set at these high lows, you would just use the magnet tool, and then when you click like on that high low, it's going to line it up right at that low. And then same if you want it for the high right here, if you have the magnet tool on, it's going to clip right on that high. If you don't have the magnet tool and you just click on this high here, you can see that it's not exactly on it, right? So you can see it's slightly above it. If you wanted to click onto it, just click on the magnet, drag it down a little bit, and it latches right to that high. So if you do use magnet tool, it'll give you like exactly where that high is, so that you're not off by like any little bit or not. It's just going to be exactly where that high is at. So it's kind of like a little cheat tool to make sure that you're exactly at the high low and you're not anywhere above or below it. So let's see if we have anything else here. And that looks like about it. So other than that, yeah, if you guys have any questions regarding this, feel free to, ask any more, but I think for the most part, it's pretty easy to use the tools right there. Let's see, other than that, let me scroll down a little further. And I think that's it. So if you guys have any other questions, feel free to put your questions in the chat. We've been on this session for about 2 hours, so I think it's about time for me to take a break. I didn't realize we were on this for so long. We had a lot of questions to cover. And I'm glad that a lot of you guys asked a lot of these questions, because a lot of these sessions tend to have not so many questions. So I'm glad that you're back, Gerald. I'm glad to have you back here. And I'm glad that you asked like a lot of questions, because I'm sure that cleared up a lot of confusion for a lot of people, especially all the variation questions. the high lows. I know that's stuff that people are still confused about, but they're scared to ask about. So glad that you asked for that. So other than that, unless you guys have any other questions, we'll be wrapping this up. So I'll sit around for like maybe a minute or so. If there's any questions, feel free to put them in the chat. Otherwise, I think this was a pretty good session. We covered a lot of stuff here. So there's a lot to review. If you guys didn't watch it, there's the replay is going to be available as well. Rami said, sorry, Sean, came in a bit late. Is it straight on YouTube? Yeah. So once we get off this live session, well, it's already on YouTube. So if you want to go watch it now, you can. But you can always just pull up the YouTube channel, and then it will give you, let me see if I can pull it up right here. Yeah, so here's the YouTube channel right here. When you go to videos, it's going to be the most recent video right here. So once we have that right there, I'll just refresh it, and then you can watch the replay whenever you feel like it. But yeah, I mean, other than that, guys, I think that's it. So if you guys have any questions, feel free to reach out on Telegram or email. I'll be around. So if you guys have questions, feel free to reach out. Otherwise, Valentine's asking, hi, bro, how do you take the volume profile? I don't know. I don't use volume profile, Valentine. So unfortunately, I can't help you with that. I know people use different tools here for that. There's different ones here. Some people use the VPVR. I don't use it though myself, so I can't really tell you how to use it. I've seen other people use it, but I personally don't use it. You probably have to just find a video on YouTube explaining how to use it. But yeah, for the most part, I have no idea how to use it, unfortunately. Well, actually, I kind of have an idea how to use it, but I can't explain it to you because I don't know how to use it properly. So yeah, it's there's different ones that you can use. I don't know if you have these on yours, but you can go to technicals, go to volume profile, and then figure out how to use it. But there's videos on these, so you can just go on YouTube and watch. This is one that I see the most though, the VPVR. It's the main one. But yeah, I can't really explain too much on that. Sorry. Gerald said, I've learned in school that the smartest kids were the kids who always asked lots and lots of questions until they got it, and getting there, getting people funded, on the road to making lots of profits. Yeah, no, definitely, Gerald. And I'm glad that you're back and you're asking a ton of questions, because the more that you ask, the more that you'll get, right? If you don't ask the questions, nobody's gonna get the answers. So yeah, no, thanks for asking all those questions. And sorry if I was like a little harsh on you. I was just trying to get across to you that you have to go and figure out what works best for you. I know everyone's looking for that magical strategy, but there isn't one magical strategy. There's a lot of them. Yeah, no, definitely. So just save this video, Gerald. After we get off this live session, I'll post up the link, and then you can just save it, and then you can have it ready for you whenever you want to go and review it. So other than that, guys, have a great rest of your day. I'll post up the link shortly. If you guys have questions, feel free to email me or message me. Otherwise, I will be back on the live session tomorrow morning. Also, next week, we will most likely have our group mentoring session right after the live. So if you guys have any questions, or you guys have any, if that doesn't work for you guys, just let me know, and then we'll try to move it to another time. But we're gonna try to have a little bit earlier next week. So other than that, guys, have a great rest.